Hey everybody, it's because I'm here. Woo! Let me fix my hair. Welcome back to Strongman Personal Finance. We just had a Meat Breath Kevin stock go bankrupt, and we gotta talk about it. Why? Because every time these fintech influencers, these finfluencers, whatever stupid name you want to call them, every single freaking time that they say a stock is going to 5x, that they say a stock is going to henhex, guess what happens? It never does. So let's go check out Shift Technologies, and then we're going to watch Meat Breath's video from way back in the day. So what does Shift Technologies do? Shift Technologies, together with its subsidiaries, provides an e-commerce platform for buying and selling used cars. Oh, yeah, Carvana, bro. The company operates in two segments, retail and wholesale. Okay, so it's an online car selling service provider. Wow. Let's look at the stock's financials. Okay. Revenue plunged. Man, talk about some crazy revenue growth right there. Oh my God. So revenue's crashing. Shares outstanding are massively increasing. Earnings per share is negative. Free cash flow is negative. Negative 48% operating margin, negative 54% profit margin, and negative 61% free cash flow margin. Wow. Let's look at the balance sheet. Current assets of 77 versus current liabilities of 58. Okay. They must have burned through all of their cash. Look how the cash just went down and down and down. They ran out of cash. Simple as that. Long-term assets of 32. Long-term liabilities of 182. Wow. What does that mean? Their shareholder equity is negative. They have more debt than assets. What a great company, Meat Breath. Good job, bro. Bro, look at the revenue, bro. Didn't pan out well. So let's go ahead and watch Meat Breath here. Tell us about this cheap $8 stock that could 5x. It's not that it will, but it could 5x. So that covers my butt if I get in trouble. Buying this now. And funny enough, he left a comment. Hey, everyone. It's here. I just want to be super transparent here. This is around 1% of my portfolio. I'm not going all in here. It's too small and there's big volatility risk. If it falls, I'll buy more. If it goes up to over 15, I'll probably stop buying. Wow! All right, let's go ahead and watch his sales pitch on Shift Technologies.
Hey everyone, me Kevin here. In this video, I'm going to talk about a very cheap $8 stock that could 5x in value pretty quickly. That means it could go to $40 per share relatively quickly. Or it'll...
How high did this stock go? Did it ever go to $40? Okay, this is weird. I don't even understand what's going on. I guess maybe they did a reverse splitter. I don't even freaking know. Or they did something because the stock price isn't adding up. But we know it massively plunged since then. Oops, wrong one.
Go bankrupt. So if I'm wrong, don't sue me, bro. And if I'm right, well then subscribe and stay tuned for the future videos.
Yeah, no responsibility, bro. If I'm wrong, okay. No consequences. If I'm right, I'm a curse, bro.
So quick heads up, I do want to just say I did also tell all of my stock and money course members about the stock yesterday when I first bought the stock. And unfortunately today, the stock's already bumped 10% in price, but that's, in my opinion, relatively small compared to what I think this company could do in the future. So I don't really...
You're right, Kevin. Isn't that kind of sketchy? Like, I'm not saying he's like pumping and dumping, but it's like you tell your private course, yeah, bro, button stock, bro. And then the stock goes up 10% the next day. It's a little weird.
Care about the 10%. I'm not trying to come across as like, yay, pump and dump. I have no intentions of selling this company, so I just want to make this very clear. I bought it, I plan to buy more, and I have no plans to sell it. And remember, you can always use...
He definitely sold this stock.
Use that Black Friday month coupon code to join me in those courses like Stocks and Money, where I also talk in live streams about my investment decisions and new stocks that I look for every day the market is open. You only pay once, and you can use that Black Friday coupon code link down below, or email me for a bundle coupon code at kevin@mekevin.com. All right.
You guys should have signed up. You really missed a good deal.
On to the company. The company's name is Shift. It is a used car selling company that is gearing up to give Carvana a run for their money. Carvana, Shift, and Vroom are the top 3 e-commerce based used car sellers right now. And right now, used car sales that are taking place mostly online, or at least start online, only make up 0.9% of the industry. But industry experts and even companies like Vroom are expecting that we could see in the next 10 years, e-commerce based used car transactions explode to 30 to 50% of the market. That's huge. That's 30 to 50x where we are now. And this...
Okay, so first of all, even if that's true, And that does happen. That doesn't mean the stock that you're buying is going to be the one that benefits from it. There's plenty of companies that are in an industry that's growing that go bankrupt because they don't succeed. Some of them succeed and you could make a lot of money, but just because you're investing in an industry that could go up doesn't mean you're going to make money. Now, back then there was a used car bubble. Okay. And I think the reason that was there was disruptions with supply chain. So new cars probably weren't being made as much. Interest rates were super low. So there was a huge demand for used cars. And used car prices went through the roof. So these companies just probably get a cut of the transaction. They were doing very well during the clown market. The clown market is over, okay? And the used car bubble has popped.
This sets Shift up to be a potentially massive growth company as long as it can claw market share. The company trades under the ticker symbol SFT, and its legal name is Shift Technologies, Inc. It's an $8 stock, and the company has a market cap of barely over $600 million, which is honestly...
So it had a $600 million market cap. Now it's 32. Oh, you gotta laugh at it, man. You gotta laugh.
A tiny, teeny little company, which does come with risk. When you're buying these really cheap, like tiny companies, like you could go big or you just lose everything.
Are you ready for retirement?
No.
Our free retirement planner shows you where.
Sometimes it feels like roulette, except I feel like the odds are like 80% that we're going to go, in the black here and not in the red, which is good. We want that. Or in the case of the correct coloring, in the green. So the company listed onto the stock market through a SPAC a couple months ago, blank check company, and its stock has been a bit volatile following a miss on Q3 earnings expectations. The Q3 earnings call, which I listened to every word of it, let me just say it was a little bit of a mess. Like the executives were stepping over each other, and I honestly kind of think it was, in fairness, it was their first earnings call, but I kind of feel like they didn't know what they were doing on the earnings call. Like the
All right, what was this video made? So it was made November, so Q3 of 2020. Let's see what the financials were in Q3 of 2020. That actually goes back that far. Let's see, Q3 of, man, we got to go back. Okay, so the income statement. So they had negative 35% operating margins, negative 38% profit margin, and negative 54% free cash flow margin. This was back when Meat Breath was talking about it, okay? They probably had a lot of cash back then. Let's go see how much cash they had because of the SPAC. But they massively burned through it, okay? And a company that burns cash, it's very predictable what they're going to do, okay? They're going to keep going down. They're going to burn through the cash, and they're going to have to raise more money eventually. It's simple math, okay? But he was buying the stock with those insanely garbage profit margins. Whoa, whoa.
Analysts are like, no, this is what I mean. And they answer, and they're like, no, that's not really what I meant. What I meant is this. It's a mess. So the company isn't good at giving guidance yet. It's a money-losing company. Executives aren't really sure how to deal with analysts yet. And honestly, I'm not even really sure why you're watching this video. I mean, Carvana has car vending machines. Why would you bother with Shift when you could buy the overpriced Carvana stock?
They were both overpriced.
Well, there's why. See, Shift is special, and we're going to talk about the valuation differences here in a moment, but Shift is kind of unique. I mean, first of all, it sources cars locally, and it sells them in the region they work in. Shift really only works in about 5 regions. If you download the Shift app, you'll see they've got like 11 or 12 locations listed, but they're really only in 5 regions. Los Angeles and Orange County area, NorCal, San Diego, so 3 of them are in California, Washington, and then Oregon. That's it. That's 5 regions right there. They're about to launch.
God, the worst regions in the United States, the left coast. Well, that's a really diversified company. They got 5 regions.
In their 6th region in Austin, Texas, but they need people and they need more used cars. Like they are constrained right now because they're not in that many regions. They don't have enough employees and they don't have enough cars to sell. Carvana, just for comparison, is the biggest online seller of used cars right now, and they sell in 30 regions across America. That's 6x the amount of regions that Shift sells in. But here's the thing. Carvana currently sells for 4.6 times its estimated $8 billion revenue in 2021. Vroom sells for 2.3 times its estimated 2021 revenue. Shift,
Hold on
the market right now, sells for just 1.3 times its 2021 estimated revenue. Maybe that's because people don't believe Shift, which is entirely possible. Again, they could go bankrupt.
Yeah, it's just so easy to judge a stock. You just look at the ratios. Price to sales is all you need. Price to sale, future price to sales. The revenue in next year is trading at a multiple of the revenue that we just pulled out of our ass. It's so useless. There's a reason companies trade at valuations like that, okay? The market is pretty efficient overall, okay? There's a reason that companies sometimes trade at lower valuations than other companies, and this is probably one of them. They're very concentrated, it looks like.
So don't sue me, bro.
Or, excuse me, they were.
Don't go all in on this. Don't sell all your Tesla stock to YOLO on Shift, okay? Shift is a baby. It is the smallest of the bunch. It is up there with the top three players here, but it's tiny. It's an immature little baby, and basically, the only reason I kind of like the stock is because people seem to like this baby. Actually, there's more to it. I like the valuation, and people like this baby. Let's talk about that.
I looked at forward price to sales ratio, and I liked it.
See, Trustpilot ranks Shift at a 4.1 star rating out of 5, with 20% of customers having a bad experience. That is actually substantially better than Carvana, which ranks at just a 3.5 star rating, with 22% of customers having a bad experience, and it literally blows Vroom out of the water. Vroom is rated at a 1.4 star rating, with 80% of their customers having a bad used car buying experience. And these ratings are consistent across Yelp as well. People seem to really like Shift. In fact, I was chatting in our stock group yesterday, in our Discord stock group, with a course member who works at Tesla, and when
people like the company. It's like LaFufu going and watching the freezer section of Target. Oh, people like it, so it must be good. That doesn't mean anything, okay? People can like a product, and the company can be massively unprofitable. It doesn't matter if people like it.
To Tesla to buy a car, he actually recommends that they sell their old car to companies like Shift or Carvana and just price match them and see which one gives them a better deal. But before we talk about more of that, let me just quickly get this out of the way. Shift has centralized customer service. They handle all their sales locally, and they source all their cars locally, but they do have a centralized customer service department to really ensure they've got a consistent customer service message. In their opinion, this also leads to fewer days to turn around a car, which is good because inventory on the shelf is basically money out of the coffers of a business. And in terms of website traffic growth, Carvana's traffic in the last 3 months grew at 32%, which is really, really good. Shift only grew at 11%. But Shift grew almost twice of what Vroom grew. Vroom only grew at 6%. And remember, even though Carvana's website growth is around 3x what Shift is doing, it's selling for 4 times as much money on future earnings, and it's servicing 6 times as many different areas.
Did he say future revenue? Earnings and revenue are two entirely different things. Just think about how ludicrous this is. There's a guy in a suit giving a pretty good presentation about a stock, and it still went down. Well, now it's probably down 100%. Okay? Just because somebody has a suit and they sound intelligent doesn't mean you're going to make money. But all you clowns just keep getting sucked in. Oh, but he's got a RuneScape on the background. See the little RuneScape dragon dagger? He's so smart. What a bunch of morons.
Shift is, we mentioned this a little bit earlier, but, because they're a little baby, they've also got growing pains they got to go through. They got to attract more talent. They got to attract more salespeople. So they got some work ahead of them. All right. So now we've gotten so much of the background out. We get it. They sell cars. They're a baby company. But Kevin, okay, they're cheap. They're cheap relative to Carvana. Why the hell, though, would we buy Shift instead of Carvana? Why would you buy the loser of the bunch, the runt of the litter? Why? They're the newest, and they're the runt. They're the baby. They're going to get bullied and destroyed by the big guys. Why doesn't CarMax just come in and absorb them up and screw them? Well, here's why. See, used car sales is really interesting because let me give you the opposite. Okay, let's put used car sales on the shelf for a moment. Let's think about Tesla and NIO. See, think about Tesla. Tesla's an automotive manufacturer, and they benefit from something called winner takes most. That means that Tesla's brand loyalty and the fact that it's years ahead of other EV competitors like NIO in manufacturing and scale means that Tesla might take most or a big chunk of the EV market space. That doesn't mean I don't like NIO. Don't get me wrong. I like NIO. I invest in NIO. And sure, there's always going to be competition, right? There's always going to be another choice.
He invested in NIO too.
But Tesla has a huge moat or huge insulation against competition because, well, they were first, they've got excellent autopilot, they've got the scale, and all of the scale that they're building and the efficiencies they have in manufacturing allows them to reduce the prices of their cars, making it harder for other competitors who aren't as efficient to profit. This is why...
Yeah, that's why Tesla's massively slashing prices and their margins are imploding and the stock keeps going up because they just have such a moat, bro. Nobody else is going to buy any other car except a Tesla. There's no other alternatives, obviously. Self-driving. Oh, wait, we still don't have that.
NIO, for example, focuses on the higher end, more expensive SUVs. They're not going to try to race Tesla to the bottom because they can't. They don't.
Hey everyone, Colton Carnival here with Fast Graphs. So we're going to take a minute to take a look at Tesla.
Don't have the competition capabilities, at least not yet. So that's how NIO's trying to slice out market share. They're trying to stay away from where Tesla's playing because they know it's hard to compete with Tesla in a winner-take-most environment. So wouldn't the same apply to, taking this back off the shelf, Carvana and Shift? The answer is no. See, Carvana and Shift are in the space of buying people's used cars, fixing them up, and reselling them, basically flipping cars instead of houses. So let me ask you this. If you want to buy a car right now, a new car, you might be interested in buying a Tesla. And if you had already bought a Tesla and you love Tesla, you'd probably want to buy the Cybertruck and the next one, right? But put this hat on for a second, okay? Let's say you got a used Toyota Camry. Who are you going to sell the car to? Carvana? Because, I'm bleeding. Oops. Are you going to sell it to Carvana or are you going to sell it to Shift? Oh, you might be thinking, well, I mean, I know Carvana, so I'll sell to them. Probably not. Instead, you'd probably be thinking, oh, dude, come on, Kevin, this is obvious. I'll sell it to whoever the heck is going to pay me the most money. Where am I going to get the best deal selling my car? And see, that is a very different kind of market space. It's kind of like Redfin versus Open Door versus Zillow. Hey, I'm going to shop all three of them. Who's going to give me the best price? I don't really care. I just want the best price. I mean, customer service is useful as well, so maybe you kick Vroom out, but then you've really got Shift and Carvana. People are at least going to get 2 quotes, maybe not always, but the odds are they're going to get 2 quotes. So that creates a very unique opportunity for a small, in my opinion, undervalued company like Shift. See, Shift is spending money like crazy trying to buy market share. This is why their financials, their expenses don't look that great. They're spending a ton of money on advertising. They're trying to build up that brand recognition, and they're not getting enough cars in and employees in to actually push the product. This is a real typical growing pain stage for a baby fledgling company like Shift, which, yeah, creates a lot of real competition for it. But because of the space that Shift is in, yeah, profit and margins might compress, but Shift can be a player in a space against Carvana, whether they're tiny or they're big, solely because people want a simple experience. And
so they're in a competitive industry. They're currently unprofitable. Their margins will decrease, is what he's saying. Look at his face. Wow, that really worked out well.
want a price shop. And that means that Shift has a very real shot of competing with Carvana no matter what market.
It also has no moat because literally there's no brand loyalty. People just go with the best option. Okay. And a larger brand could probably have more options to attract people in. Like, it's just ridiculous.
They're in. In that kind of case, okay, this is where things get fun. In the event that Shift does end up competing directly with Carvana in all the markets that Carvana is in, what's going to happen to Shift's valuation? Well, hedge funds come in.
Well, if they somehow massively expand from the left coast and are just suddenly competing with Carvana because somehow they're massively unprofitable, but they're going to somehow keep growing and growing, and because we have a cloud market and interest rates are zero and they're never going to go up. Yeah, they're just gonna compete with Carvana, bro. And if they do that, then yeah, maybe they'll be the same market cap as Carvana.
And they go, wait a minute, why are we paying 4.5 times earnings for 2021 at Carvana? We could be paying 1.3 times earnings over at Shift. And when that happens, people buy Shift, the price of Shift goes up, the multiple or future earnings multiple that people are paying goes up, and before you know it, you're paying 4x earnings at Shift just like you are at Carvana. Now, Shift isn't as mature yet, we don't have the margins down yet, the efficiencies aren't there yet, so Shift probably won't be profitable until 2023 or 2024, or they'll go bankrupt. But this is a very real stock that could potentially 4 to 5x simply by the market valuing it like its closest competitor.
Do you see why I hate the stock? Oh, if in 5 years it does this and that, then maybe it will. And clowns, like, they go off that. And like 99% of the time, it doesn't work out. It's such a ludicrous thing. You're paying people to do these analysis where they're literally just guessing the future. That's what he's just guessing. He's just pulling crap out. Oh, well, you know, the multiple will expand because they're gonna be directly competing with Carvana and all. It's all BS. It's all garbage. See how that worked out?
Carvana. And again, things get better with time, things get better with margins and scale, so we can't look at Shift and say, all right, it's going to 5x tomorrow. This company could literally go down to $4. I'm not going to sell it, though. I'm going to keep this because I like that competition against Carvana. I want exposure to that used car market, which this pandemic has absolutely blown up. And while
the pandemic ended, and what happened to the used car market?
Encourage you to do your own research, I'm putting money into this thing. So I do want to clarify as well, why did the stock start going up recently? Well, it started going up recently in part because the executives over at Shift decided to each put $100,000 of their own money into buying the stock back off the market. So they paid market price of about $6.80 to buy this. To me, that was really a symbolic move. 100K from each of them, probably a drop in the
losers
bucket for them, right? But it's just a sign of confidence from the executives, or maybe that's what they're trying to make it seem like. But hey, it's working. It got me to look at the company, and I realized yesterday, like, let's actually see what's going on here. Let's listen to the earnings call. Let's do some research. Let's have some conversations about this. And to me, it makes sense to throw some money at this. I could be totally wrong. So certainly I can't make any guarantees. I'm not a financial advisor. I'm not telling you to YOLO your savings into this by any means at all. But let's just put it this way. If this company starts getting picked up the way Carvana got picked up, it's got a good looking future ahead. That's my take. Thanks so much for watching the video. Really appreciate it. And folks,
good job, bro. How much is it down? 86%. Could you imagine the stock's 190? You buy the dip because it dipped, and then it goes down 86%. Oh my God. Hilarious. Love the glasses thing. These are actually blue light glasses because my eyes blur when I'm looking at a screen. I can't see. I wear these all day at work too because if I don't wear blue light glasses, my vision gets blurry and I start making mistakes. Like, I have to wear these now. I'm older now. Howdy there, partner. How you doing, Capital Mindset? Meet Kevin imitated you the other day in his live stream. It was pretty funny. Can't be bothered with the timestamp. Oh, did he? Did he mock me? Thoughts on Nancy Pelosi? Lame. I don't care about politics. Wow, finally I catch one live. Great video, brother. Keep up the good work. I know I'm a loser for working so much. I know, we're all losers. We all have jobs. The Fufu posted a video of people stealing his packages. Good. He needs to get destroyed. Hope they steal everything from him, like he steals from his clients. Kevin and Jeremy tell their members to buy the stock 2 years later, 50% down, if not bankrupt. And they keep growing. LaFufu keeps calling you guys out on a video saying to post your 5-year returns. Yeah, I'm going to post my 5-year returns versus LaFufu's obviously manipulated, carefully selected returns. I'm going to sell all my trash stocks and put all my good stocks. I'm going to transfer my good stocks to an account, and I'm going to keep the winners and sell the losers. And I beat the market, bro. He's such an idiot. I mean, if you're so stupid that you really believe that Jeremy LaFufu has outperformed the S&P 500, I don't know what to tell you. Okay, you should sign up. What's up, strong sperm? Why do you have a? Oh God, these clowns always just spit probabilities. I don't. That's the whole stock market. It's so I hate it. In 20 years, if they have this and that and this and that and this and that, it'll be $1 billion. That's why Tesla's still trading where it's at. It's the only reason, because it could potentially one day be the only car driven on Mars. Yes, Dogecoin will be the currency too. 1.4 billion tonight's Powerball. You guys paying that poverty tax? I'm not in bed. I'm not buying a ticket. Are you done with the new book or no? It's going to be a while. What about SBF and FTX? Did Meathead accept dollars? I think I'm pretty sure they paid him. VXUS going down. It's going to zero, bro. Still buying VT. Is the pain to come? Time to short the market. Holidays incoming. I don't short. It's stupid. Never short because you're just betting on fluctuations. Strongman, make a channel pumping Rick stock. DD consists of... I wish they had good ones in my area, but they don't. Let's see. NVIDIA, Tesla, Moxie Wits. Hi, OMG, the old strongman is back, shirtless and talking smack. Let's get it. Now, when these companies go bankrupt, of course I have to make a video, okay? I have to. Why not? If your laser eyes could take me back to 2021, if your laser eyes, I don't understand that comment. Net interest on the national, it doesn't matter, bro. I should do a video about the debt. You know why the debt can keep growing? Because people keep lending the government money. I mean, it can keep going up forever. Where do people put their money when they want to have like a safe place to get yield? They put it in treasuries. There's huge demand for treasuries. Meet Kevin caps more than the MLB. Meet Kevin is a very special person. I'm not going to say, you know for a fact that guy sold it at a massive loss. Texas harvesting. Whoa! Kendall Hughes, why do you live stream with no shirt on? I see you have some muscles, but also a lot of non-muscles. You call me fat, Kendall, with your fake profile picture? You still think I'm hot, don't you? Right. Me, Kevin, isn't a financial advisor. Peep shit and YOLO. Well, he's a financial advisor now. What do you think about Bitcoin? Trash. Will the market crash this year? I have no idea. I hope it does. I just bought SQQQ. No. Why? Just buy a long index and just hold it for 30 years. LaFufu asking for your 5-year returns is hilarious since we know your VT. You literally just Google total returns. You can go on the Vanguard website. Okay, let's go find. I'm going to go find my total returns. It's very easy. Okay, you go to Vanguard. Oh, God. Let me find this. Let me just Google it. VT ETF. Whoa! It's up 1.11%, bitches. As of Friday. Let's see. VT Mighty. What is VT's 5-year returns? Okay, so the compounded annual 5-year returns of VT is 6.46%. It's right there. You don't have to, what more do I need to show you? The 10-year returns is that. The 1-year returns is that. What more do you need to see? There you go. What is LaFufu's returns? We don't know because he just lies and manipulates. It's like an unfair game. The one time he compared his returns to mine, he got destroyed. Go look at the stock tracker. I'm beating the market, bro. So do you think that anybody can beat the SP 500? Do you think it's even possible? I mean, it's happened. It's just very unlikely. I mean, obviously it's happened, but over 30 or 40 years, it is very hard. Not 20 years. Oh, Mr. Strongman, do you think that... Okay, you already said that. Let's see. When's the next live stream with Jay Nagy? We'll find time. I need to reach out to him. Are you with Citibank or SoFi to get the high? Don't you say you're still with US. Well, I use USAA for my banking, but I have a money market in Vanguard. I love stock market. Those lazy retailers always lose money. Yeah, stock market's so amazing. You just guess crap. People pay you money. It's got 5,000x. Oh, here's money. Here's money. And then you lose the money. Oh, buy another stock. VT is no PP. Me Kevin claps my cheeks. Yes, me Kevin is a genius. Obviously, we can tell from that video. He wears a suit. All right, so that's it. Shift Technologies went bankrupt. Have to talk about it. Have a good night, everybody. Cheers.